Welcome to our weekly shipping report. VLCC rates remain strong. Next leg depends on demand. The sharp acceleration in VLCC freight seen in late January appears to have peaked for now. Nevertheless, the Baltic Dirty Tanker Index continues to trade near multi-year highs, reflecting the strong gains accumulated over recent months, around 90% year-over-year as of early February. The Arabian Gulf VLCC market showed softer momentum into early February. While Arabian Gulf to China rates edged up only modestly on the week, freight levels remain exceptionally elevated, with very strong month-on-month gains and rates more than doubling year-on-year. At the same time, elevated levels have increased charterer resistance, with some players stepping back or covering discreetly to limit further upside. Indian refiners have eased spot purchases of Russian crude, introducing some uncertainty around near-term Pacific flows, while Russian sellers have responded by widening price discounts to defend market share, particularly in Asia. However, a full replacement of Russian barrels remains unlikely in the short term. U.S. crude does not provide a like-for-like alternative due to grade and refinery constraints, limiting its ability to displace heavier feedstocks. Indian buyers have also shown openness to Venezuelan crude on commercial grounds, though volumes remain opportunistic and price-driven rather than part of a sustained import pattern. It therefore remains uncertain whether the VLCC market is evolving toward a more Atlantic-driven structure. For now, regional VLCC supply tightness between the Arabian Gulf and West Africa remains the dominant driver of both upside and downside risk. Softer Chinese crude import momentum toward the end of January adds uncertainty to near-term demand visibility. Against this backdrop, freight markets appear to be consolidating at elevated levels, with recent corrections driven more by cargo timing than by any material weakening in underlying fundamentals. Thank you for watching. You can read the full report in our website, www.breakwaveadvisors.com. See you next week.